All right, so let's dive into this closing market report for today. It's, well, it's election eve, and the markets are, well, you know how it is.
Yeah, a little jittery for sure.
You always see it right before a major election.
It's almost like clockwork.
Yeah, and this one's no exception. But we're going to unpack it all today. Really focus on what all this means for, you, our listeners, the retail investors out there.
Absolutely. That's the goal here, to make sense of it all.
Exactly. So first things first, let's set the scene, right? What's the overall vibe in the markets right now?
Well, I'd say the mood is definitely cautious. You see stocks are down, Treasury yields are down too, but not by, any crazy amount.
Right. Nothing too dramatic on that front.
Yeah, but volatility. Now, that's a different story. It's definitely up today, which tells me, it tells me that investors are a little hesitant.
They're like, hold on, let's see what happens first.
Exactly. They're not making any big moves until those election results are in. It's a wait-and-see kind of day on Wall Street.
Makes sense.
And the interesting thing is, this uncertainty usually fades pretty quickly once the election results are known, and the report suggests we might know as early as Thursday or Friday.
Oh, wow. So maybe even by the end of the week.
Yeah, could be. And then, well, usually volatility starts to decrease, Investors start feeling more confident, start making decisions.
Makes sense. They've got a clearer picture then.
Right, exactly.
Okay, so the big picture is, like you said, cautious, but, hopefully things settle down soon. But let's just zoom in a bit now, look at some of the specific things happening today. I noticed the tech-heavy NASDAQ had a bit of a mixed day. Apple and NVIDIA both making headlines for different reasons.
Right, very different stories there.
Yeah, so Apple stock dipped today. Warren Buffett's Berkshire Hathaway continued selling off their shares. And this wasn't just a small sale, This was their second major sell-off of Apple stock in recent months.
It makes you wonder, right?
Yeah. What does Berkshire Hathaway know that maybe we don't?
Are they expecting a downturn for Apple, or are they just, changing their strategy? It's definitely something to consider if you own Apple stock, for sure.
Absolutely.
Now, NVIDIA, on the other hand, they had a good day today. Got a boost after being added to the Dow Jones Industrial Average.
Yeah, that's a big deal for them. So it seems like those individual companies had some, pretty notable ups and downs, but the overall impact on the tech sector wasn't that big today.
No, not really.
But here's where things get kind of interesting. Small cap stocks, which are usually seen as a bit more volatile, they actually saw gains today.
Yeah, they bucked the trend for sure.
The Russell 2000, the index that tracks those smaller companies, ended the day in the green. So what's the story there?
Well, remember how we talked about Treasury yields being down?
Yeah.
Lower yields usually mean interest rates are lower, too.
Right.
And when interest rates are lower, it's good news for smaller companies. They can borrow money more easily, at a lower cost. And that can really help them grow.
So it's all connected. Lower Treasury yields make it easier for those small cap companies to kind of thrive.
Exactly. It's like a domino effect. And understanding these connections can help you make, smarter investment decisions. Now, moving on to another sector that saw a lot of action today, energy. OPEC's decision to delay an output hike sent energy stocks up.
Yeah, I saw that. Supply and demand, right?
That's it. When supply is limited, prices tend to go up.
Makes sense. But I did notice that the utility sector didn't do so well today. What happened there?
The report says it's because of concerns about data center demand, after that government ruling that limited nuclear power usage for Amazon.
Oh, right.
It just shows how even within a sector, you have all these different factors that can influence stock performance. It's a lot to keep track of.
Yeah, it's like trying to solve a puzzle sometimes. Speaking of puzzles, let's talk about earnings season. We're almost done with the third quarter, and companies are starting to give us a peek at, what they're expecting for the fourth quarter. Are those expectations all sunshine and rainbows, or are they a bit more, cautious?
Well, according to FactSet, they're a big financial data company.
Yeah.
They say more companies have actually issued negative guidance for the fourth quarter than positive ones.
Oh, wow. So they're not feeling too optimistic?
And guess what they're blaming?
Yeah.
The election.
Really?
It seems like businesses are a little hesitant. They don't want to make any big commitments until they know what's going to happen with the policies after the election.
So they're basically saying, let's wait and see who wins before we go all in.
Pretty much, yeah. It's all about that uncertainty, it always makes people cautious. But, beyond the election, there are a few other things coming up that investors should watch out for. For example, we've got the ISM Services PMI data being released tomorrow.
Right.
Basically, it's like a snapshot of how the services sector is doing.
And that's important for investors
Oh,
because,
think about it. The services sector, it's a huge part of the U.S. economy.
absolutely.
Everything from like restaurants and hotels to healthcare and finance, it all falls under services.
Right, right.
So when that index is strong, it usually means the economy is doing well.
Got it. So we'll be watching that data closely for sure. Anything else on the radar?
Oh, definitely. The Fed meeting wraps up on Thursday, and well, there's a lot of talk about a possible rate cut.
Oh, yeah.
Futures trading is actually pointing to a pretty strong chance of a cut, maybe by 25 basis points.
Okay.
And while a quarter of a percentage point might not seem like much, it can have a big impact on the market.
Especially coming from the Fed. They're like, I don't know, the conductors of the economic orchestra or something.
Exactly. And it's not even just about the rate cut itself. It's about what Jerome Powell, the Fed chairman, says afterwards.
Right.
Investors always pay close attention to his comments. They're trying to figure out what the Fed will do next.
They're looking for clues about the future.
Will they keep cutting rates? Will they pause? Will their overall stance change? That's what everyone wants to know.
And depending on what they say, the market could react in a lot of different ways.
Oh, absolutely.
So, yeah, Thursday's announcement and Powell's press conference, those are definitely must-see events for investors.
Can't miss those.
Now, I know we've been talking big picture stuff, but I want to go back to something you said earlier. You mentioned this report was tailored for retail investors. Can you explain that a little more? Like, what makes this information particularly relevant for, someone like me managing my own portfolio?
Well, it's about focusing on the details that really matter to individual investors. Like we've been talking about how the election can create short-term volatility, but that shouldn't derail your long-term strategy, right?
So don't panic and sell everything if the election doesn't go the way you hoped.
Exactly. Focus on the fundamentals instead, things like corporate earnings, economic data, and monetary policy. Those are the things that drive long-term market trends.
Gotcha.
And speaking of earnings, this report makes a really interesting point. It points out that companies that did better than expected this quarter, they were rewarded more by the market, while those that didn't do so well, they were penalized more harshly.
So it's even more important now for companies to deliver strong results.
Seems like it, yeah. There's this heightened sensitivity to performance, almost like a winner-take-all kind of thing going on.
Makes you think, huh?
Yeah.
Is this just a temporary thing, or are we going to see more of this in the future? It's hard to say. And we should probably mention that we're still right in the middle of this earnings season. The report says about 350 companies in the S&P 500 have reported their third quarter results so far. And overall, earnings growth is looking pretty good, actually.
Yeah, that's definitely a good sign. It means that even with all the uncertainty going on, there's still some strength in the corporate world.
Gives us a little bit of hope amidst all this election craziness. I like that. Speaking of data points, there was one more thing in the report that caught my eye. Factory orders. It seems like overall factory orders dipped in September. But new orders for non-defense capital goods actually went up. Now, for anyone who doesn't know, non-defense capital goods are basically things like machinery, equipment, software, the stuff businesses use to produce other goods and services.
And they're often seen as a sign of how much businesses are spending and investing. So the fact that new orders for these goods went up, even though overall factory orders went down, well, it suggests that businesses are thinking about the future.
They're still willing to invest in their growth, even with, some economic challenges.
Yeah, exactly. It's about looking beyond the headlines and really understanding the data.
It's about finding those little nuggets of insight.
Right.
And that's what we're trying to do here on the Deep Dive.
Give our listeners the tools and knowledge they need to make smart decisions.
Well, I think we've covered just about everything in this report, from the election jitters to those tech stocks, those small cap gains, the energy sector, earnings season, the Fed meeting, all the things that matter to our listeners.
Yeah, I think so. Hopefully, everyone listening feels a little more prepared now, a little more knowledgeable about what's going on. It's all about information, right?
Couldn't agree more. And as always, we encourage everyone to stay curious, stay informed, stay engaged. The market's always changing, and we'll be right here with you every step of the way.
Until next time.
Happy investing.